Hello everybody, welcome back to yet another red day in the stock market unfortunately. Today we are seeing basically all of the main US stock indexes fall, with the Nasdaq finishing the day down 0.76%. So not as bad as yesterday, but obviously not bucking the trend just yet. We're still seeing a red 5-day period, and again this absolutely is quite a slide when we look at it on the 5-day time frame. Even going out to the 1 month time frame, you're now seeing a drop of 8% over the past month, and over the past 6 months you're now seeing basically all of those gains that we had over the election period being wiped out. Now there are a number of reasons for this, and I suppose one of the big ones might be the fact that a lot of investors are just not happy with the current conditions of the market. We're seeing today that stocks have closed lower, a volatile day as investors say that the market is sick and tired of Trump's tariff chaos. So, irrespective of what you think about the policies themselves, one thing appears to be true, and that is that the broader market right now isn't very happy with them, right? These policies, it seems to be causing an absolute slide in market trends. However, this is not really a new thing. This is not something that we didn't expect for a long time. I mean, a lot of people who are not as acquainted with the stock market might see this as a big slide. However, what we must consider still is the broader period, right? We've been seeing in the last couple of months the S&P 500, amongst a lot of other indexes actually, being at basically all-time highs. You know, we've broken all-time highs just recently on the S&P. And a lot of people now, especially given the global economic conditions, the macro conditions of the US as well, especially regarding the tariffs and all of the challenges and changes coming into place there, a lot of people now are wondering if the markets are actually fairly priced. So now what we're seeing is apparently nearly 90% of fund managers say that the US stock market is overvalued, apparently the most since 2001, and this came out on the 18th of February. And it says that a record number of fund managers see US stocks that are listed here as overpriced, according to the Bank of America's February Global Fund Manager Survey. The survey, which included 205 panelists managing $482 billion in assets, found that 89% believe that the stock market essentially is very, very overvalued, right? The highest level who believe this since 2001. And we know what happened in 2001, of course, the dot-com bubble. So this is something that a lot of people have been warning for a long time. And again, a lot of people might want to blame this downtrend on Trump's tariffs, or the trouble that comes with them, or the trouble that is coming with them. And perhaps this is the ultimate catalyst. But the question is it likely that markets are going to crash anyway? Was it likely to begin with? Either way, I do not see this as being a very bullish position at the minute. And I know some people are looking at this as a potential bottom area. Potentially it will be. But in my head, in terms of a risk to reward basis, if I was to weigh it up, I wouldn't see this as a relatively stable investment at the minute. That's just my humble opinion, of course not advice. But I do think we're in a challenging time. I think we're entering an even more challenging time. And again, just zoom out if you're in doubt to the 1 month, to the 5 month, right? Even on the 1 year, the 5 year, even on the 5 year, even considering the drop that we've seen now, still up 10%, and at the highs, we were up nearly 20, if not 25%. Zoom out to the past 5 years, right, and now we're just looking at March of 2020. If you'd have held stocks up until now, you would be up 141%. This is not an insignificant drop, right, and at the highs, it was even higher than that. If you'd have simply bought and held an S&P 500 fund, you would be up more than 150%. This is absolutely incredible. This is worth considering. And this is just over the 5-year period, right? So at some point, a lot of people are of the mindset that something will change, something will need to change, something will inevitably change. So a lot of people are looking at these assets, especially assets in tech, like a lot of the big tech companies on the Nasdaq. A lot of people are seeing these as quite overvalued at the minute. And I think this is worth considering. I think it all ties in to create a picture where we need to ask, how healthy is the economy at the minute? How likely is it that we're going to see a crash? And what do we expect to come next? Of course, that's a bit for you guys to decide. You can make your own minds up on that. But I do think it is a bit of a worrying trend that we're seeing here, honestly. I think I'm going to sit out on the market for now. That's just my humble opinion. But do let me know your thoughts on this in the comment section, guys. Thank you so much for watching this video. If you enjoyed it, give it a like and subscribe. And I will see you again soon. Goodbye.